All right, and we're live. Hi, Jody.
Hello.
Welcome back to Core Team Hawaii's live stream, which we do almost every single Tuesday. I would say 50 out of 52, 50 or 51 out of 52 Tuesdays a year here on our YouTube channel, Moving Hawaii on YouTube. And we resyndicate this to the Hawaii Real Estate Podcast. So if you have to put the phone down or put your AirPods in while you're in surgery or something, this is what came to my head. I used to do surgeries. I listen to music. I'd actually do the surgery. I was doing an x-ray. But if you got to do something like that, you can download this on most streaming platforms at the Hawaii Real Estate Podcast as well. And actually, I'll do a better job. Some of our Sunday video drops are noteworthy podcastish content as well, and worth listening to without the video. So we'll get some more content, even some old content like Kenji's behind the camera. We did one being black in Hawaii. You saw I tagged you, the guy on IG. He'd be a good one too. This guy Frozone on he'd be a good one to do being black in Hawaii part 2 and just stuff like that. So try and get more content out to you guys. Today I got a call on the way over here that someone's family member needs to sell their house, so they're looking at HELOCing, and I was like, you know what, we have Jody today for the duration of this show, so let's do a video, have a conversation focused on HELOCs to start. Before that, go to coreteamhawaii.com for anything and everything real estate. Go to the very bottom. There's this contact form right here. Fill out the contact form. Sunday through Thursday, our assistants queued up, ready to hit you right back. And you can get into our YouTube and IG and everything here as well. I want to say one more thing before I open up the HELOC questions. And of course, we'll get to our safe surveys where we brag about ourselves later and stuff too. But we are basically, in my opinion, the number one team in Hawaii.
Bring that up.
Oh yeah,
and I saw it.
Basically, in my opinion, the number one team, and there's semantics involved here that are biased towards us, but in Hawaii, in EXP Hawaii, EXP is the largest brokerage by unit count in Hawaii, and so our team is ran under EXP, and the people. We were number 3 in volume, so millions sold in the month of September, only beat by a group, I would say. The one air quotes team, loosely held title, has tens of people, and they have their lender purchase online leads, and they try to do some Zillow, and there's a bunch of people hodgepodge together. Teamish.
Yeah, it's not really a team.
Not by my definition, and this is not just, it's not throwing shade or anything.
No.
But if I'm coaching agents or I'm speaking on stage or something, the way I define a team is the way I would look at like a basketball team or a soccer team, where there's a cohesiveness, everyone's operating under the same system, the same marching orders, and everyone has a role, right? And so a team, we're number one because there was that group, and then number one was this air quotes team that has, I think, 200 to 300 people. And so it's just numbers.
That's a lot of independent people doing their own thing.
So to give you an idea on the finances, and our brokerage, the mega team structure, when you have 10 or more, and whatever, the minimum that those people give to the team leader. So in our situation, be the person who rents this whole office and who has tens of thousands in expenses and hires all the assistants. The minimum that they give on those teams like 10%. And just from a business structure, that's not really a team. That's how brokerages run.
Right.
So if you're like at a Remax, you might give Remaxer 10%, and then you keep the rest. It's more of a brokerage structure than a team structure. So being beat by them, I like the team leader. He's a friend of mine, I would say, cool guy. But them and then another large group. And then on the other side, unit count, number of units, we're number 4. And those same 2 people ahead of us. And then another one that has grown to be a mega. I think they have less than 20, but more than 10. And I'm going to leave it at that. I have something negative I could say.
Yeah.
But yeah, we're doing good. So Jody, I got a question today, and it was basically there's this house that needs to get sold. So anyone out there listening, if you're looking potentially for a home in Hawaii Kai, we likely have a listing coming. So someone's family member needs to sell a home in Hawaii Kai, but they're potentially looking to HELOC it first. Home is completely paid off. It's probably worth I don't know, let's just say 1 point something million,
Yeah.
completely paid off, and but she has no income. Can they HELOC? I mean, she has
They cannot HELOC,
cannot HELOC,
but they can get a second mortgage.
but they can
I
get
mean,
a second
it's not even a second mortgage because it's free and clear. So they'll get a cash out refinance.
cash out refi.
Yeah.
Yeah. How long would that take?
We can get that done in less than 30 days.
Okay.
Similar time frame of a HELOC.
So why can you get debt in one way but not the other way? I think I know the answer, but I want to ask you.
And there may be a product out there where you can do a no income home equity line of credit.
Some certain credit union or bank or
Yeah.
community bank or something.
Yep.
Yeah.
Or even just like a bigger capital type lender. Yeah. But no real local credit unions, none of the big local FDIC banks, none of our broker sources are doing that particular product.
When I hear, because my initial thought is like, if you have something worth $1 million and you need 100 grand and I have it and I can loan it to you, and then you default on that, great. You need to pay me because I'm going to give it to you I'll give it to you at like 10% or something.
Yeah, that's like a business mindset.
Yeah. So I'll give it to you at like 10%. And if you don't pay, then, whatever. And then I'll eventually foreclose on your home.
Mm-hmm.
And then great. I got $1 million house for 100,000. Or what was the other? I was going to go another direction with that, but that's not how these actual banks and institutions look at it. They don't want to actually foreclose on you.
Banks are not in the business for foreclosure. Banks aren't looking at it like, wow, this is a great deal because then we're going to net all this income, assuming that they default on their loan.
That's not their business. That could be wildly profitable if you do it enough times, which I'm not saying that they should. It's not a very good way to live, or, it's not good energy, right?
It's not good energy.
But I'm just saying from a pure profit standpoint, it could be profitable, but that's not the business that banks are in. They're in like interest rate, debt servicing, collecting at scale, not like individual foreclosures, right?
Yeah, I mean, I've had a lot of conversations too with other people that are like, this is not adding up, like the math's not mathing, and I'm like, actually the math is mathing. That's why we're saying no, because you cannot prove that you can pay this.
Right.
You cannot prove that you can make the monthly payment.
Yeah, this person has less than $1,000 a month in income.
Right.
Yeah.
So even though they have all this net worth, it's real net worth, and it's a really a lot of money. It's not like when you look from a qualifying perspective, debt to income ratio, you don't qualify.
Okay, but then wouldn't that be the same for a cash out refi?
Well, cash out refi, there are loan options where as long as the necessary equity is there, that you don't need the income. So there are products that are not home equity
but it
lines
would not
of
be
credit.
a Fannie Freddie product.
No, this is non-QM.
Non-QM.
Yes.
Yeah. So what does non-QM mean for the people?
So it's not a qualified mortgage. So I guess in layman's terms, I mean, it's just a type of mortgage that is a little bit riskier, that costs a little bit more, but it's still a very viable solution for many people in unique situations.
I just you got Jody's dog on the thumbnail.
The only photo I got.
I know. I gotta send Kenji some pics. I love that picture.
So that threw me off. I had a. Where was I going with it?
Well, I was just saying that there are loans that exist that are not falling upon a qualifying standpoint.
Oh, I know what I was going to say. Thank you for a jog. So for the people out there, at some point in lending, there was probably no federally influenced law. So Fannie and Freddie aren't actual federal entities, but they're kind of like adjacent, right? Or influenced by, or in step with. What's the best way you'd say that? They affect the whole country, but it's not government.
Yeah.
Yeah. And so and especially post 2008, post like economic crisis influenced by bad loans, even more rules and regulations for their industry on the lending side. And so when you say non-QM, it's like outside of that, outside of these strict guardrails for most that are set forth for most regular mortgages.
Yeah, it's like
Non-QMs.
another type of financing.
Another type of financing, yeah. Big Kahuna says, Aloha Core Team Superstars. Ashley K. Hi, y'all. Ashley, congratulations. I have it on my calendar to call you today. So congrats, Ashley. Officially closed today, she says. Big Kahuna, Jody, I'm about to custody my crypto portfolio and will want to borrow verse it once it hits a certain level. How difficult is that? And we have run numbers with you a couple months ago.
So are you talking about using your crypto as the collateral, or are you talking about using the crypto like you're gonna cash some of it in and use it as a down payment?
I think he says borrow verse it, which think he means against it, similar to where you'd borrow against your stock portfolio. I mean, let's get back to HELOCs eventually, but can you do that? The way if you have 10 million in NVIDIA stock and you can potentially borrow with that as collateral, or if you like bank with Schwab or whatever, it's possible that they will, that you can borrow against it and get your loan through your financial institution. What I learned is they still want you to have income if it's going to be a 30-year like conforming type mortgage. Your brother was telling me. If you
not always.
Okay, correct me if I'm wrong, because we have a client, I don't know if you know a client I'm talking about, but has a high net worth and largely in stocks. And it wasn't going to make sense for them to go through Schwab because he doesn't have current active income. And so
right. Because Schwab has like a mortgage company.
Schwab has a mortgage company, right? But you can you can leverage against it, but it's just on different terms. Like it could be recalled on like what Derek said, like on a 90-day term or something. So it's like in 90 days, Schwab might say, I want my 2 million because NVIDIA or Tesla or Google Alphabet is going down. And so to get that long, sticky 30-year, can't touch my loan terms mortgage, you still need active income, even if you have all this net worth in stock. But if you don't have any active income, you can get like a shorter term type mortgage that probably will roll over, but could be called due.
Right.
Yeah.
Right. And also you could get a non-qualified mortgage.
A non-QM, yeah.
And also there are ways to convert your net worth into income, which we kind of talked about. I feel like.
No, tell me. So what, like you have 10 million and you put it on a schedule to be like, I'm gonna.
Yes.
But do you is there like a way with Schwab you lock in those sell-offs, or does the lending company just have to trust you that you're going to keep selling and realizing the tax?
Yeah.
event?
So if it's a stock, it's not like a scheduled payment. If it's a stock, there's just like the total amount of valuation times 60% divided by 360. So you need to have a lot.
I want to pause on that math. So what she's saying is, say you have $1 million times 60%, that's $600,000. The reason why I pause on that is Jody kept saying net worth, which we all do. We all say net worth. Technically, a more appropriate term would be gross worth, but no one says that. Because when you have $1 million in Tesla stock, you're going to have some realized tax event. So you don't actually have $1 million in liquidity. You have $1 million that you can borrow against. So if you were to sell all $1 million today, there's going to be a tax event. And in this situation, they take off 40%. And so I saw you do some more math. So $1 million in stock, 600,000 in net. So $1 million gross worth of stock, 600,000 net worth according to this equation. So they're saying 40% in realized taxes. And then
divided by 360.
So that's
$1,600 a month.
60
income, which is not a lot.
Man,
for qualifying purposes.
I thought I was a millionaire. I don't actually have $1 million in any stock, but I thought hypothetically for this experiment, I was a millionaire.
Right. I mean, then when we're talking about like 10 million, I mean,
okay.
I know not that many people have 10 million, but I mean, when we're talking about that and it's in stocks, that's the difference. But versus if it's a
So 11,000 a month.
Yeah. Versus if it's a retirement account, there's a nicer equation.
What if it's what is the term? I always forget. What is the term when like techies have stock options is like half their income?
Yeah, it's an RSU.
Reserve stock units?
Restricted
stock units.
Mm-hmm.
If X amount of those are past the vesting period, can you set a schedule to pay to like sell those too?
It's really hard.
Oh, we're getting technical on this.
Really, really, really hard. And we kind of did this with a conventional loan, but this guy had a lot of RSU.
Yeah.
So, and he had a lot vested.
What company was he early to?
Google.
Ooh.
Yeah.
Yeah.
So
was it our client?
I feel like it was.
I know of one.
Yeah.
Yeah, one comes to mind. So
it was this whole thing of like, here's evidence of all, and it's not easy. It's not easy to get the evidence. So depending on the asset institution,
okay,
some are easier to document than others.
Because the RSU, so you work for Google, they give you 250,000 in pay, 250,000 in stock. Those are RSUs. Google uses like a Schwab or a TD Ameritrade or something to hold those RSUs in. Right. Yeah. And then you need to prove how much you have and when you're out of your vesting period and when you have the ability to cash in. Right. And so usually it's a 1 year. And so the ones, what do they apply? Do they do 60% on that too? So if you have $1 million of those, is it times 0.6? Yeah. And it's really, really, really hard. It's that is not I feel like it could be even further reduced because not only do you have a tax event, but you also have to account for who knows if the company goes down. Exactly. Right. Especially if it's not a behemoth like Google or Microsoft or Amazon. Right. It could be worth $0 in 1 year. Density AI, Yes. Then who knows? And that's why people struggle with the fact that we can't use RSU as income. They're like, I'm freaking rich. Yeah. Why can't you give me money? I'm so rich. Yes. And then you're like, yeah, but it's RSUs. Yeah, and that's when we've gone back and forth with people that are like, no, XYZ Mortgage told us that they can use my total income, which is $500,000 a year. And I'm like, 250 is no, they can't. 250 is money. 250 is RSU. Yeah. They can't give you that, and they're like, no, they can. So like, there's just can they for like? And so what's today's conventional rate? Like 6.2 or something? 6.1? 6.125. 125. So can they use their total income, but for a non-QM loan at 8%? Is that what they're saying? Absolutely. Yeah. Like we can do that too and do better. Yeah. Yeah. So we're trying to find a way to make it work conventionally to give you the optimal interest rate. But if you're telling me that we're competing against an 8%, yeah, we can beat that. Yeah. And that's sometimes, we have one that we kind of lost that way where we were like, no, this fact about the condo that you're trying to buy as an investment property kills the deal. We were speaking more in terms of like conventionally. But yes, if we're talking about going to non-QM loans and now I'm giving you an 8%, or at that time it was more like an 8.625, instead of a high 6, then yeah, we can do that all day. Yeah. So it's just like, it's important to really communicate and for us to really show the different options. Yeah. Big Kahuna says, can we speak with Jody again after the show, Larry and Kelly, for reference? So it depends what time we get her out of here. She has appointments. If I keep her too long, then it won't be right after. We'll call you though, Larry. Vent says, there are a few ways to collateralize a Bitcoin or tokenized stock. It would be double collateralized. And if the value of the assets drops, they sell your shares or crypto. Vent says there. Right. So then it's not right. So in that case, it's like collateralized, but it's at risk. Versus like when you do a mortgage and the asset that you're buying is the collateral. Nothing's going to happen if the value of the asset goes down. Okay.
Right?
Let's go slowly through that. So I buy a regular home, whether it's conventional, VA, whatever. I buy this yellow house. It's in Waipahu. And why you laugh, bruh? I buy this yellow house. It's in Waipahu. And you say, well, what is it backed by? Why would anyone give Derek $1 million for the house? It's like, well, because the house is worth a lot. And so that is my collateral, the house I'm buying. Conventional, I had to put 20% down, maybe, or it could be less. VA, I put 0 because I served my country. But that's the collateral. In this other scenario, you bought Bitcoin when it was 17 cents. Oh my God.
Wow.
Yeah. You bought Bitcoin.
I know people that actually did that.
I know. The nerds.
Wow.
Wow. They bought Bitcoin at 17 cents and they're like, well, I don't want to sell it. So that will be my collateral. So he's saying it's double collateralized and you're saying it puts it at risk. So what happens if Bitcoin, their $100 million Bitcoin portfolio goes back down to 17 cents? What does that mean? Like on the way down, they have control and they can make you sell your Bitcoin?
Yeah.
Do they take custody of it? And
yeah. I mean, not that they take custody of it, not that it's no longer in your name, but it's liened. Just like a asset, just like a house gets liened.
Oh, and there's LIEN, just in case you're wondering. And
there's agreements
that you have to sell.
If it hits a certain mark.
Then what if you don't sell?
I don't think you can. There's not a stop gap. Like it's like it happens.
Oh, so their wallet, like,
but then maybe
Coinbase would have to have a function where ABC lender, 123 lender has this thing where Coinbase just sells it.
Yeah, or it's more like cryptobank.com has permission to do it.
You have to probably move it to a certain.
Maybe you move it to a escrow wallet. I don't know.
Yeah, it's not something that's done a lot. Like these. Yeah,
it's not something that's done a lot, and it's not. It's truly. I mean, buying crypto in general is freaking scary. You're like. Yes, you're sending.
The more I talk with our mutual contact, the less I'm concerned about
scary.
It. Well, if it's if it's Bitcoin, ETH, and XRP, like I'm going to start dollar cost averaging into those.
Yeah, I mean, it's not saying it's scary, but just saying that there's this thing that you wire a whole bunch of money to, or an amount of money to, and then that money is gone, right? And then you have this like place that you log into, and then you see your value of your Ethereum, and then there's these unique passwords and logins and all this stuff, and then it's like if you lose that thing, like the guy that lost his hard drive that finally stopped searching for it.
No, he found it. He found it in the landfill or whatever. Yeah,
no, stop it. I read that he stopped.
He did stop, but then I saw one yesterday. He said he found it.
No, he did not. I am so happy for him. I could cry.
Imagine living life knowing you have 5 billion on a hard drive in a landfill or whatever. Yeah.
He found it. I did not even see that news.
That's what I heard. Yeah.
Okay. So anyways, but
yeah.
Right. So like that thing is gone, right? The password is gone. The unique, like 17 randomized words that you get in case you forget your password.
Yeah.
You lose that thing. Your baby picks it up and throws it away.
Yeah. It's got to be in 2 safe deposit box. One in Japan, one in Wisconsin.
That's scary to me, right? That aspect of it versus like being able to call the 1-800 number and be like, oh.
Yeah, we feel it's interesting, right? Because our money is ones and zeros largely, and it's largely ones and zeros, and it's in up to 250s FDIC backed or whatever, and we feel good about it because it's normal, but.
Yeah, our parents.
That's also weird too. Yeah. Like our parents probably saw online banking as crypto, right?
Oh yeah, they did.
Whereas the crypto super nerds, they're like, Bitcoin's blockchain is perfect.
Yeah,
like,
they're like
Satoshi is a god. It's actually perfect.
Yeah, it's safer than where your money is.
Well, it is though, right? In a way. The coin itself, the price of it could vary. The coin itself is locked in and like. Forever, it's perfect. The way I understand it, Vince is probably eating it up. He's like, tag me in. I know all about this stuff.
I know.
All right, let's go back to HELOC. So, what do you need to get a HELOC? I'm hearing you need income. Oh, wait. On the Hawaii Kai one.
Yeah.
Is it better that so it's an older person. Is it better that they do a cash out refi or a reverse mortgage?
Cash out refi is going to be cheaper.
Cheaper and faster.
Reverse mortgages are so expensive.
Oh, really?
More expensive than a non-QM.
I was just thinking, if you don't have income.
And they go up every month.
What if you only need it for a short amount of time?
Yeah, I know.
Because reverse mortgage, I know you don't need income for that. The asset is the cut.
Yeah.
So
they're similar.
Is there a world where you couldn't get the cash out refi, so then you need to do the reverse mortgage?
I guess if your credit score wasn't high enough and if your equity wasn't high enough.
But they have $1 million plus in equity.
Yeah. So if their credit was crap.
Mm-hmm. Reverse mortgage.
Yeah.
To get the money if they need it. Is there an early payment penalty on reverse mortgage?
Typically, yes.
Yeah. So that wouldn't be a nice thing to do.
Yeah. And we could, the origination fee, the fees are high on reverse mortgages.
Yeah.
Yeah. So
better get used to the blockchain. Literally big kahuna, Larry. Literally everything will be moving on chain, and it's coming much faster than you think. Japan and Korea are rapidly adopting, with the US close behind. Yeah, there's some love or hate the administration. There's some talk about, the US dollar is weak and weakening, and through quantitative easing, through multiple things. Tariffs don't help inflation and weakening of the dollar, but also this administration seems to be trying to position ourselves as the crypto leader of the world. And so that helps to cement the US further as the dominant global financial power, right? I'm just learning about this stuff from someone much smarter than me, but I had these conversations yesterday. So Vince retracted his message. He's cooking up something good, I'm sure. He knows more about crypto than us. Okay, so on the HELOC side, what do you need to get a HELOC? Because actually, I'm considering getting a HELOC. And I've heard people say it's not a HELOC if it's not your primary residence. It's just like a lock. It's a line of credit, but not a home equity if it's not primary residence. Any truth to that?
I don't agree with the statement.
Because Bank of Hawaii could be any one of your multiple houses. Just call it a HELOC, right?
Right.
Yeah. I know that. So say someone has to or wants to get a Bank of Hawaii loan. You guys can always beat them because your wholesale line is just better rates than their retail line, right?
Yeah, they compete against each other.
Yeah.
And it's similar to like when we broker to a source.
Rocket Mortgage.
Right.
Like Rocket Mortgage has been doing a lot of advertising. So occasionally we get a client that says, I hit Rocket Direct. And you're always like, yeah, but our wholesale Rocket lines beat the retail lines, a separate entity.
Right.
Yeah.
And they compete. They're literally competitors. And when I explain that to people, they're like, what do you mean? I'm like, Rocket Wholesale, they work with brokers like me.
It sounds like you're telling me, come McDonald's drive-through, we'll do better than the restaurant side.
Right.
And I'm like, it's just all chicken nuggets.
Right.
Yeah.
Exactly.
But it's not that.
It's not.
Yeah.
It's not that. And they genuinely compete against each other.
Yeah.
Like there's a whole, imagine like the company meeting where it's like the wholesale side being like, yes, we killed them again.
Yeah.
Like they are not on the same team.
Yeah.
And we do have a better, cheaper product because think about it.
Volume.
Think about how much Rocket Mortgage retail is spending on the commercials, the Super Bowl, whatever, the
Super
thing
Bowl.
that they own, the like stadium that they own, or the basketball court that they own, the actors and actresses that they're paying for to do those dang Rocket commercials.
And then and as a result, I would imagine, I don't know, maybe Gemini can tell us. I would imagine that retail is 10% or less of their total volume as a parent corporation.
I wouldn't know that type of statistics. That's more of a Derek Tonga thing.
Yeah.
But
I bet you wholesale is more than retail.
Yes.
Yeah.
Yes.
Yeah, because think about it. One line, thousands of lines. Right? Wholesale is thousands of lenders. Retail is one line.
Yeah.
Our commercials and our inbound lead flow. So
yeah,
wholesale's got to be more.
Yeah. And wholesale doesn't have those types of, what's the word? Overhead.
Yeah.
They don't have that type of overhead. They have people like me who they don't pay unless I bring them a loan. and we're bringing them a loan,
Right.
and they're like, oh, guess what? We get to give you a better rate. So anytime we're competing with Rocket, and it is kind of interesting to explain to a buyer because they're like, well, I'm working with Rocket, right? And I'm like, I may or may not broker your loan to Rocket. I may not broker your loan to Rocket,
Yeah.
but I may broker your loan to Rocket. So then they'll actually get a disclosure that comes from Jody at Pacific Rim Mortgage, but then it's telling them to log into their Rocket login, and they actually can use their same login that they already created when they were trying to do a loan with Rocket Retail.
Oh, that's probably. I would want them to have to make a separate one.
We've talked about it.
Yeah.
We've talked about it, and I'm just like, that's like uber confusing. It's just like a weird look. I don't like it, you know?
Yeah.
And it doesn't happen that often, to be honest. But recently, I think it was a call-in. They were with Rocket Retail, and it just so happens we ended up doing Rocket Wholesale, and they were very confused. But then they were like, "Why is it so much better?" You know. But it's just like that's just retail versus wholesale. It's similarly to banker versus broker.
Yeah. Gotcha.
How do we get on this? I forgot.
I don't know. But Vince says, I have names of lenders that will take Bitcoin, but I'm not posting it here. Wink.
Post it.
Yeah.
What does he mean by take crypto? We can take crypto.
Yeah. I think. Yeah, and I think Jody's not saying that they can't. Say it's uncommon. Your terms are not good. You're not going to get the same interest rate.
Yeah, I mean, we're not using your crypto portfolio as collateral.
You're not.
No, we do not.
I think he's saying there's people that will.
Yeah, there are, like cryptobank.com.
Yeah.
I mean, he can post those for people that want to know.
Yeah. Okay. My wife used to do loans, but the crypto loans are coming. Well, I would agree with that, Vince, right? So, the crypto or the blockchain or the NFT, everything is coming, right? Like we can apply that to every sector. Like it's coming. The gods are the new, silicon gods are coming. So yeah, it'll be interesting though, Vince, to see the adoption rate, right?
Yeah.
Of like, at what point will your Bitcoin and your Tesla stock be like equal in terms of ease and access to leverage?
Right. And like, what are the rates and, versus using the thing you're buying as the collateral.
Yeah. Well, the thing you're buying is probably always I want to say the best way, but will always be the most traditional way to buy. But when will stock and crypto be equal in terms of asset? Probably when there's more regulation on crypto, right? Which is the crypto world loves, because more regulations mean more legitimacy, more acknowledgement. Where is Joe NDA? Where's Joe NDA says, question on equity loan. For example, if I still owe $250,000 and the current value of my home is $1.5 million, how much equity will the bank lend me? Yeah, so thanks for bringing us back.
Yeah, that's a great question. To get the best rates, it's going to be 80%. So you would do 1.5 times 0.8, which is 1.2, and then minus your 250,000, which is what you already owe on the property. So that leaves like 950,000. That doesn't mean you're going to be able to get the entire line, but because some banks might be like up to 80% and up to 750,000. And if you want to go over 750,000, then we'll only go up to 70%, right? So then we'll have to do the whole math equation again say like, okay, since we want to go above 750,000 home equity line of credit, then we'll do our valuation 1.5 times 0.7, which is 1 million minus the 250. Because that's not going away. So that gets us to 800,000. So it's like, yeah, you can get an 800K HELOC on keeping you under 70% loan size compared to the value of the property. And we call it C LTV. So we add a C to LTV because it's the combined loan to value. It's your first plus whatever HELOC amount you want to get compared to the valuation of the property.
I got lost on that one.
Okay. So it's just.
So let's do easy, $1 million loan or $1 million house. I need to have paid off I need to have greater than 20% paid off?
Well,
Because
greater than
80% would be the maximum.
Yeah, if you don't owe anything.
So I would need to have no more than on $1 million appraised home. I would need to have no more than 800,000 in leverage on that home, right?
Well, you can have up to 800 for the HELOC.
But
So
if I have
you,
800,
if
I
you owe
won't.
800, you can't get anything.
That's what I'm saying.
Yeah.
So I would need some number greater than 800. Let's just say 700 to start accessing
Yes.
equity.
Yes.
And then I would cap at 800 or 750, depending on the terms.
Right.
Let's
And
see.
that's to get the best rates. Now, there are community banks that will take you all the way to 100%.
Yeah, I've heard of that. Why?
I don't know.
Are they in the business of foreclosing?
They're not. None credit unions are.
Then
None.
why? Well, if you foreclose with 100% leverage out, then it's actually really bad for the bank anyway. Yeah.
They're not getting anything out of it. So they truly want to do loans for people. That is their purpose.
And what would the rate be? Like if today's HELOC rate is 6%, the community bank that'll take you higher to 100%, like what would that rate be?
It's like 7.5.
It's not that big of a difference.
It's not that bad.
But the thing that just seems like bad business. That HELOC.
Well, keep in mind they only go to 45% overall debt to income ratio. So that they have a safeguard.
I see. So the DJ. So okay.
Yeah. They have a safeguard.
Yeah, I guess so. So you have to have a lot of active income and no other debt to do that. But if you have that income, no other debt, why would you need the HELOC?
Right.
I guess in rare cases, because you don't want to sell your stock or whatever. You don't want to sell your whatever else. And so you leverage your house. I don't like it.
No, I mean, a lot of people don't have stock.
I know, but why? Why would any person who I want to do business with want the last 20% of their equity?
Because their job as a community bank is to lend to people in need that qualify.
Those people, though, I guess in America it's a family it's an emergency. But even
think about it. What if they're paying off 19% consumer debt,
like a car? They went to go pay off a car
or credit cards, and they're saving.
I'm not giving them. Me, the Bank of Derek. I'm not giving that. If that person found themselves in that situation, I'm not giving them their equity from my bank.
Right.
Like
and they're in the second position.
And
right?
they're in the second position.
So if something happens, the first mortgage gets taken care of first. If anything's left over, they get what's left over. But that's my point. My point is the community bank's reason for existence is to service people and lend money to people that can qualify based upon their guidelines.
Sounds like a house of cards.
Yeah. I mean, if the numbers make sense. Yeah, I don't know why they go to 100. I'm always like, I refer a lot of business to them because I have to say like, oh, well, we can't do it. We're not able to do it because we can only go to 80. But I know someone that can go to not just even over 80, 85, 90, 95, 100.
What if it's not your primary residence and you're getting a HELOC? What is typically the highest you can go?
70.
70.
Mm-hmm.
Okay. So $1 million house. You need to have some number greater than $300,000 paid down, principal paid down.
Yeah.
Okay. Because actually, I'm considering HELOCing my Coalina.
The investment property.
Yeah. Reason being, I don't want to touch the money, but when I'm thinking about how to invest or whatnot, I'm considering just putting extra cash towards principal pay down. But then, for example, like the call I got today, especially in my world, about every couple of years, I get a call where someone's like, "Hey, this house is a tear down. My family has to sell it. We just want the easiest solution." And so then occasionally it might be like, "Well, what if I buy it? Or what if I go get some weird type of lending, which still requires me to have a down payment?"
Mm-hmm.
And so if it's in a HELOC, I can aggressively pay down this, try to pay down this investment property, but still have access to capital should I get some opportunity, But 70%, that's through Banco?
Mm-hmm.
Okay. Yeah, so all right. What else about HELOC should the people know?
Well, you only pay if you pull.
You only pay if you pull. So you can
So-
have an open line of
Yep.
$1 million,
Yep.
but you only pay if you pull.
Yeah. So you're paying $0 until you draw from it.
And it's daily interest, not like pre-amortized
Yes.
interest. So if you draw $500, but then you pay it off in 2 weeks rather than 30 days, it was 2 weeks worth of interest.
Right.
Which is why some people like eventually first position HELOC their house and don't have a mortgage. But I would say that's probably too advanced for most people.
Right.
There'd be a lot of study you'd need to do to get to that point.
And a lot of discipline.
And a lot of discipline. Yeah. Like I don't trust me in the house with Reese's after on November 1st. It's a bad time. There's all these Reese's in my house. Like you don't want that. So in some of you should not have a line of credit.
Right.
You know?
That's one of the big cons, right? It's like all of a sudden, okay, we're only going to use it because we want to upgrade our kitchen. And that's only going to cost $40,000.
I don't like those. I don't like those home repairs on a HELOC. Well, because it's kind of like
I mean, some people, the kitchen's falling apart. Like they need it. So it's
The
not like they're like,
whatever.
oh, I just need the most up to the date, like fancy
nah.
double convection oven. Like
I
some
don't
people
care.
it's falling apart. They need a functioning kitchen to run their household.
They're not in Gaza. They can deal with their junk kitchen. They do not. If your kitchen got to that point, even more, you don't need to have debt. I'm just gonna say that. Now, if it's for a resale and you're like flipping to get it on the market, that's a different thing. But I'm just super disciplined with debt. It's probably actually worked to my detriment because I didn't get into certain things earlier. I didn't make certain real estate and stock plays earlier when I kind of had some knowledge around me, but I was just like, no, debt bad or yeah. But I
People
don't like
do it
it.
for all kinds of reasons. To buy a second property, to upgrade, to pay for their kids' college, to debt consolidate, I'm just thinking of reasons. We're literally doing it right now. To sell. We're helping one of your guys' sellers. They're just doing a baby HELOC just so they can fix a retaining wall, I think.
Yeah.
Yeah.
But they're getting ready to sell. Yeah.
So to be able to sell, to invest. I just did one for $250,000. He's doing some sort of an investment with that money. Those are the types of reasons that we get commonly. To pay out a partner, so a divorce or a breakup in some regard where money
that?
needs to be paid out for a reason. Those are all common reasons.
So here's the thing. This is what oh shoot. What it reminded me of is some people say, my stepmom did this. And I was like, no, let me help you. But she's like, you're a child who I helped raise. Like, don't try and tell me how to manage my money.
Right.
But she's like, I keep a mortgage because I need the tax benefit.
Okay.
And I was like, yeah, but what happens is you pay $1 in interest up to a certain max deduction. The government will like give you back this
Mm-hmm.
and say, here's your tax deduction back. But this was still paid in interest.
Yeah.
It's a bad thing. So HELOCing.
Well, yeah. I mean, and sometimes it's like you need a tax deduction. You're not even in a tax bracket high enough to need it. Don't worry. Don't worry about the taxes that you're going to have to pay.
Yeah.
Because your bracket,
That's like, I need a new Aloha shirt
right.
just in case Shakira hits me up. Shakira ain't hitting me up. And I'm married. It's just not realistic. It doesn't pertain to you, right? And so that's
Right.
one thing. But then when people are like, here's it'll make sense in a second.
Okay.
I need to HELOC so I can update my kitchen
Mhm.
because after all, that's good debt. It adds to the value of my home. No, I don't. While there could be some truth to that, in general, don't operate under that principle because it doesn't matter if you put gold-plated toilets in your home. It only matters once you sell, and how much will it matter when you sell? And so HELOCing to do the kitchen and the home you plan to be in for the next 15 years, I really don't like it. I don't like it. I wouldn't advise you do it. I would advise you go sell musubis
Right.
and cut grass and start a business or work extra
do
shifts.
it the long way.
Raise that money and then do your kitchen. Don't take out debt. It's just a bad path. It's a slippery slope. It's the iceberg starting to melt and it gets to its point of terminal melting or however that works.
And that is statistically being proven. I saw one of the articles I read yesterday said that, defaults on mortgages and home equity lines of credit and consumer debt, right,
are up.
They're up.
Do you know the foreclosure rate right now?
No. It's like, we could look it up.
I bet you. So while Jody looks that up, I'm going to talk to you about the foreclosure rate. So prior to 2000, to the COVID interest rate market, a healthy foreclosure rate was somewhere at around or slightly sub 1%. So 100 loans, like 0.08 of them, like 0.8 of them or 1% or so go into foreclosure. And that's just how it works, right? You write 100 loans, something's going to happen, divorce, bad luck, knock on wood, some terminal illness, things happen, right? Just bad, bad financial management. Immediately post-COVID, that number was down to like 0.2, 0.3 because so many people refied into these super low interest rates that while affordability in the market got really bad, affordability for already homeowners got really good because they had their loans at 5% and now they were able to refi to a 15-year at 2.5 or whatever. And so foreclosure rates had actually gone down. What I think I'm hearing from Jody is it's probably somewhere above 0.2, 0.3 right now. It's probably gone up.
It says it was an 18% increase, but I can't find the actual. It's a very small percentage.
Here, let's ask Gemini. What do you guys think? Put a comment. Leave us a comment. Did you know that around 1% historically has been like the foreclosure rate slightly under?
It's very low.
And what would you think it's at now? Here, I'm gonna ask Gemini. Gemini, what percentage of home loans go? You found it? What is it?
1.1%.
1.1? And that's in what time period?
July compared to August of 2024.
Oh,
I don't know if there's 2025 data.
Gemini says, as of mid 2025, the percentage of home loans in the foreclosure process is very low, around 0.48, so almost 0.5%. This rate is well below historical averages and far from the peak seen in the 2008 financial crisis. But 0.48 up from, say, 0.5 from 0.25 in 2021, 2022 is 100% increase. So interesting. All right, we're gonna get out of here. We're gonna get to some here. If you have any last comments, we'll look at those and then we'll brag about ourselves a little bit. Definitely, and we'll have Jody give the daily rate. She already today's interest rate. She already kind of gave the conventional, but we'll give it in one package. Big Kahuna retracted a message and then said, "Definitely not borrowing from the Bank of Derek." You know why? Because the Bank of Derek is underfunded. We're not giving any loans of any significance, especially having just overpaid for a house. But I enjoy the house.
But it was so worth it. I overpaid for my house 10 years ago or 12 years ago or whatever it was. And honestly, I'm like, I would have been so sad if I never got it.
Yeah.
And I know I overpaid.
Yeah. Yeah, we like the house. The longer time goes on, the less it will hurt, but I did overpay. And I use that to guide clients, right? I'm like, what's the reason you're buying? What's the motivation?
But I mean, and that's why it always does come down to like, I always ask people when they're like, oh, they countered back 7,000, something like that, for example, right? And I'm like, how are you going to feel if you don't get it?
Well, yeah. Are you here for a 3-year military tour? And you may or may not buy, you're looking at renting, you already have a lease available or housing, or you local and you can be here 10 years. And
you've been looking and you've been, you know what I mean? Like this is kind of checking all the boxes. You're super excited. You really want it. And then you're hemming and hawing over $7,000.
You can almost never find someone who bought real estate 10 years ago
Yeah.
and regrets it, but you can walk out on the street now and find all kinds of people that regret not buying or not buying more.
Yes.
And so 7,000 is nothing on a 10-year, and in terms of lending, what 7,000 would be
like $40.
$40 a month. Yeah, that's crazy. Okay. Ashley K, who was in the chat today, regarding Mahe. We are closing on Tuesday the 7th. It's the perfect trip somehow. She has very similar personality to mine, and she just fits with the family really well and seems to understand what we needed. Yeah. And Mahi is a big fan of yours as well.
Yes.
Nikki tell about Kenny. Our offer has been accepted and it's been great! Exclamation. He's honestly been really great. He actually found a house that he knows will be a great house for us. Tavia says, we're all good over here. They've been fantastic, so I'm all good. That's regarding Mahe and myself. Aiden and Mahe from Justin K. They've been all over, and they've been helpful, and it's so appreciated. Yeah, Justin K. We've been like back and forth and up and down, and Aiden just went to your house yesterday evening to check things out, and we're helping put a unique solution together for Justin. Aiden and Mahi again. Aiden and Mahi have been definitely, and this is Michael F, have been definitely always 100% all in to help me find a home. We just did our final walkthrough yesterday on the home. It's very exciting. Both of them have been very supportive and encouraging. And even though we ran into some minor hiccups, that one minor, bro, and stuff, they were definitely very positive and supportive. They're gonna be able to help find the right home and get the right home that's perfect for us. So these were not minor hiccups. This has been a very, very eventful, very hard one.
Yes.
And Pacific Rim Mortgage and Step with Core Team Hawaii it's been a lot to get this one. Knocking on wood, it's only Tuesday, but
we're signing today.
We're looking good, right?
It's happening.
It's happening. Yeah, Aiden's more like, I'm not saying anything. I'm not doing that. Whereas, you're like, manifest positivity. John B says, everything is great with Derek and Aiden. I'm looking forward to working with them. Yeah, so John, we went out, go to coreteamhawaii.com if you need to sell your home, okay? We went out to John B and his last couple of agents. So one of them who I'll type the name here. I can't. And her sidekick yeah. And so they went out and they were like, yeah, we'll get it sold right away. Guarantee we'll get it sold. And then he's not ready yet. I know he's not ready yet. We had an honest conversation. I know he wasn't ready yet. But he said, they're like, we'll get it sold. And then when he didn't sign, which you go to a listing appointment and you're like a regular agent, and then they don't sign, and you're like, all right, what are the strategies to make something happen here so I can earn money? Then they came back and said, well, we have a buyer and we'll represent both sides. Like, we'll get the buyer to buy it and then we'll help you. And then he didn't like the way that set. There's a way that can happen. Like, Mahi has been on the other side of a deal with Aiden and I, and we're scrapping. Say, Mahi, control your freaking client. And she's like, well, my client wants this. And I'm like, I hate you. And so, but they weren't doing that. They were like approaching it in a way that he didn't like. And they were saying they were going to sell it. Man, this property that John has is just a unique one of one on the island. Like, no one could say with a high degree of confidence and certainty, neither the price nor the speed at which it will sell. Now, the exception to that would be if I drastically discount it. If I want to sell it for $10, I'll sell it today and I'll sell it fast and it'll guarantee happen at that price. But when you get up into the realm of like the market, no one knows how much and when. It'd be impossible. And when we told him, I don't think I can sell your home for the number that you want to sell it for, and even at the number I think is my max, I still don't know how quick. Could be in a day, it could be in a year, bro. With your house, could be a long time. He's like, breath of fresh air. Thank you. I will definitely be working with you guys. but now's not the time. So I just had to, come on, like agents out there, let's do better. It should be nuanced and honest. Like, it's not about taking listings. There is a brokerage that has a stat: listings taken. That's a bad stat.
Yeah.
You already know what I'm saying. Like, who cares if you took, like, you got the listing agreement signed on 100 listings under what pretense? We'll get it sold at whatever. Yeah, $1 million, perfect. Yeah, we'll get it. Yes, it could be profitable. If I get 100 listing agreements signed at whatever the seller originally wants to say, I'm going to get enough of them to reality, or just, out of luck, get $1 million offer, $2 million offer on enough of them. It will be profitable. It's a stressful way to lead your business, because now you got to kind of lie and damage
Like
control and massage.
Every transaction, it's like, okay, we need to convince them to come down because they knew all along that they were going to have to come down. Like, that's not a good taste for the seller.
Oh, I'm going to tell you about one off market that, sorry guys, I don't mean to be show bad character, but there's one who, you are friendly with this agent. The person hit me up. I said, their seller, I said, I can't be talking to you. You're on the market with someone else. I can't really talk to you. But we saw that they went off market. So, and Kenny showed me, hey, they canceled. So I called her yesterday, and it was obvious that agent just took the listing because they were like, yeah, all right. If you want to sell it for $1 million, it was around $1 million. Then at least I'll get a sign in the yard. It's on a busy street. Maybe we'll sell it. Maybe it'll come to reality. They were about $100,000 overpriced, in a neighborhood with a lot of competition, a lot of comps, so a lot of clarity.
Yeah.
And they're $100,000 overpriced. And then the client had a bad experience, and now she's considering renting. If her number was $1 million, let's just call it $1 million. If her number was that number all along, the agent should have said, you should rent.
Yeah.
It's not worth it for me to invest my time, my energy, my stress, and pay for photography and all this stuff.
Yeah.
But what other agents might think is, well, at least I get a sign in the yard. I get to do an open house. I'll just order the minimum media package. You do enough of that, it's profitable, but that doesn't mean it's pain-free. So, all right, Jody, let's get us. Oh, wait. Darren says, how often should you have a home inspection done for maintenance purposes, not for buying or selling? That's a good question. And if I'm living in the house, probably maybe never.
Yeah.
But like, I just moved out of a house that we're keeping as a rental, and I consider doing that one, like, I don't know, maybe after every tenant, or at least every 5 years. So good question. I do
that's
think
a great question.
Home inspection should be done a lot more often. Yeah. What are in today's interest rates as we close this show?
So VA is balancing right around 5.625, which is where it was last week. I'm pretty sure.
That's historic. Like, in the last 3 years, that's really good.
That's amazing.
Yeah.
Amazing.
Is it the lowest it's been in 3 years?
No.
Oh no, we had the blip.
The blip.
The blip, yeah.
Which just happened.
Outside of like a 90-day window.
Yes.
Yeah.
Like, this is freaking great.
Yeah.
Yeah. Conventional 6.125, which we talked about. The jumbo VA still about 5.74. So it's not even an eighth higher than conforming VA, regular VA.
So I want to pause. So Jody's saying, what is the jumbo limit for VA?
1.209.
So 1.209. Let's say you're buying a house for 1.3, and then you're using VA, and you have, you get $200,000 in the bank, or you could sell some stocks or whatever. Definitely not sell stocks for 0.1%.
Yeah.
But that's the point, is there could be situations where the difference between your VA rate and your jumbo, your non-jumbo and your jumbo rate could be so big that you're like, of that money I have in the bank, let's get my loan down to 1.209 or 1.2. But with the rate being so close, you might say, let's just keep my money in my Ally high yield savings, or in a CD, or in anything. It's only 0.1%. That's pretty good.
Yeah, we kind of show that because a lot of people are kind of in. That's a very sweet spot where you could easily land at 1.2 million, but you could also easily land at 1.3. So we're showing you a 1.3 at 5.74, and then a 1.2 at 5.65, and people are like, why is the rate higher? And they're like, that makes sense. I've never heard of that. This must be your company. And there's just we get all the questions, and it's like, no, this is a real thing that's been actually around since like the beginning.
Yeah.
Since when like a VA jumbo was considered like anything above 417,000.
Dang.
Yeah.
Back in the days.
Yes. But yeah, so that's what it is. And most of the time we're like, well, let's just look at the numbers and see that differential. And like, it's clearly not worth it at this time. Right. Investments are hot, like 6.5 at 0 points. If you're putting 25% down, if you're putting 20% down, you're right around 7 at 0 points, which is really good. I mean,
what would I do? So my Ko'olina,
mm-hmm.
which is probably worth, let's just conservatively say 1.2. It could be 125 plus.
Mm-hmm.
And I owe 7, let's say 700. I don't know. I don't actually know what y'all. If
HELOC?
if I refied it today, what would my rate be to an investment loan?
How much do you owe?
Say 700 and it's worth 1.2. I should say.
Yeah. So it would be around 6.5. It's 0 points.
Okay, I'm not gonna do it yet.
And you could get lower
because I have a 4.8% arm or something like that, and I still have like 4 years on it.
Yeah, don't touch
Just
it.
leave it.
Yeah, do not touch it. I mean, 4 years is a long time.
It's a long time.
Yeah. So you have a long runway to be able to like see how the rates are moving. But this like 25% down investment at like a year ago was like 7.5 at 2 points. Or something crazy like that. So, like you couldn't even, for people that were like, well, I'm an investor and I'm super savvy. I don't want to pay points. So just show me the higher rate and I don't want to pay points. There was no option. It was like, you're paying points no matter what, if you're doing an investment purchase.
Wow.
Yeah.
All right. Thank you guys. It's a good, dense, sustenance filled one. You know, it's a good one.
Yeah. And the government shutdown didn't even come up.
Oh, we didn't even talk government shutdown.
No.
Maybe we'll talk government shutdown next week.
Yeah.
Because I have a feeling we might still be shut down.
I think we still will be too.
Yeah.
I'm thinking it's going to be 3 weeks.
Yeah.
Yeah.
The last
3 to 4.
Trump presidency was 35 days.
Yeah.
That was the record.
Yeah. And it's kind of, it's crazy the way everything's being positioned though.
But then the markets didn't even respond negatively to it.
Well, rates went up a little bit.
Yeah.
Mm-hmm.
Barely though. Yeah.
Barely.
But then the stock market did fine.
Yeah.
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 I think we're like desensitized.
Yeah. I mean, it's desensitized. Everyone's just like, well, when are they going to come up with an agreement? You know?
And I was listening to Motley Fool and they were like, we've also kind of were more educated. We realized that only certain businesses are actually like their quarter will even on their quarterly financial statement, will it even acknowledge the government shutdown?
Right.
So if you're like Boeing, probably, or you're like Lockheed Martin, probably.
Right.
But if you're Google, maybe
No.
you don't even see it.
Yeah.
So yeah. All right, guys. See you in the next one.